Q&A time. Hey guys, what's going on? My name is hamishwhodder and we are back with another video. In today's video, we're going to be doing stock market Q&A. I'm going to be doing this every single month going forward because I think it's important to answer a lot of you guys' questions. And since the channel is starting to grow in size, it is getting a little bit more difficult for me to answer every single one of your questions when you're commenting on videos. So I thought I would make this video. So a couple of weeks ago on the community board in my channel, I asked you guys what questions you had for me to answer in this video. And that's what I'm going to be doing every single month going forward when I'm about to make these videos. So if you do have any questions, make sure you leave them below that post when I make that post. And if not, just leave them below any of the videos that I post, or especially this video. So I'll be looking at the post that I make just before I make the video. I'll be looking at comments of this video, so leave your comments down below. And I'll also be looking through various other videos that I've posted for other comments and other questions that might be important to add into this video. Just before we get started, I'm gonna need you to go below and just hit that like button. It's just down there, just click it. Yep, you got it. Awesome, thanks. All right, now we can jump into the video. So the first question here is from Aussie Wealth Creation, and he asks, in your opinion, what is your favorite Australian-based investing podcast? That's a great question, Brandon. There's this really great podcast by these two guys, Brandon and Hamish. Brandon from the Aussie Wealth Creation YouTube channel, and Hamish from the Hamish Hodder YouTube channel. And that is called the Young Investors Podcast. And if you haven't seen it yet, if you haven't listened to it yet, go ahead and listen to it. It's on iTunes, it's on Spotify, and it's also on my and Brandon's channel. So they're all on Brandon's channel at the moment, but going forward into the future, we're going to be alternating channels that we post the video of the audio on. So make sure you subscribe to my channel and Aussie Wealth Creation YouTube channel if you want to catch the podcast, or you can just listen to it on iTunes or Spotify. Thank you for the question, so I could just plug shamelessly our podcast. Thank you very much, Brandon. Let's get into the next question. Oh, actually, as a follow-up question, we've got a question from Don who asks, how would you invest your first $1,000 if you were new to the stock market? And if you go and check out episode 17 of the Young Investors Podcast, which was last week's podcast when I'm recording this, but this might come out a little bit later, so it might be a couple of podcasts ago, but it's episode 17. This is exactly what we talk about. We talk about what your different options are for getting started in the stock market and how we think you should start investing. Basically, as a bit of a summary, you can decide between being a passive investor, where you're just sort of investing in index funds that track the market and you just invest regularly. You don't have to do anything. You don't have to care about what's happening in the markets. Or you can be an active investor like I am, and you can follow a strategy like the one that's taught by Benjamin Graham and Warren Buffett and myself. And it's been a really successful investing strategy for a lot of people over the past 80 or so years. But essentially, when you're just starting out and you're making your very first investment, both myself and Brandon recommend that you start by investing in an index fund. And that's basically so that you can get a feel for the market and that you're not going to be rushing into any individual stocks that are poor businesses. And that way you can sort of sit back and decide whether or not you're going to be regularly investing into that index fund as a passive investor. Maybe that's every 3 months, 6 months, or 12 months. You want to invest $1,000 or $5,000 or whatever amount that you're comfortable with, as long as you can invest the same amount at regular intervals. Alternatively, you can spend that time to start researching some strategies and how to invest in individual businesses like the strategy that I use. And of course, if you want to learn more about how to invest in individual businesses, then check out some of the other videos on my channel and also some videos on Brandon's channel on the Aussie Wealth Creation YouTube channel. All right, so the next question we've got is from Joshua, and he's actually got 3 questions. So the first one is, in periods where stocks are overvalued, such as our current market conditions, is it best to simply accumulate cash in order to be ready for those bargain prices, or place those funds in other investments such as fixed income? So the first thing that I would say is that when you're moving into cash, this should be a natural process. It shouldn't be that you're particularly focused on keeping more cash and not making investments. You should be looking at your investments and seeing what prices you're willing to pay for them in order to be guaranteed that you're going to make at least a 10 or 15% return. And the moment when you have no more opportunities is the moment when you stop investing and you just keep accumulating cash. And when an opportunity comes along, you can deploy some of that cash. So what generally happens is you have a market downturn, you'll have a recession like we did in 2008. And essentially in that time, a lot of stocks are cheap and investment opportunities are vast. There's tons of them. So you're going to be deploying a lot of cash during those downturns, which means that you have most of your money probably in equities and not a lot in cash. Then as time goes on, a lot of those equities will start to become overvalued. Any of them become overvalued substantially, you should be selling them. or if you just want to have a buy and hold position, that's fine. But essentially what that means is as the stocks become more expensive, you're no longer going to be adding additional funds to buy them. So when your income comes in to your investment account and you have to decide whether you're going to make an investment, if those stocks are overvalued, like a lot of them are right now, then you won't be making any investments and the cash will start to build up. So it should happen naturally. You shouldn't be forcing it. You shouldn't be just selling all your stocks because you think the market's going to crash. And you certainly shouldn't be just holding off buying stocks because you think the market's going to crash. It just depends on the specific investment opportunities that are in front of you. Look at your individual businesses and what return and what profits they can return to you and how much you need to pay for that. In terms of my cash, I generally don't put it in fixed income. I just put it in a high interest savings account that earns me about 2 or 3%. That's generally okay for me. I don't really like to lock up my money for like 10 years or anything like that. You could put it in a term deposit. That's a great option. Or you could buy short-term bonds. You could buy less than 1 year bonds. But I just like to have it available so that if I need to deploy it, I can. With a bond, it's still tied up. And you might be able to sell that bond, but there's a bit of, the price might be different and that sort of thing. So it's better if you just have it available, in my opinion. If you have tons of cash available, then of course you should put some in some fixed income, long-term fixed income, so that you can sort of make some long-term profits on there. But if you don't have a huge amount, then you should just be keeping it in a high interest savings account or short-term term deposits. Joshua's second question here is, what would you recommend? Would you recommend bond ETFs as a component of your portfolio? So personally, I just stick to equities and cash. I really don't dabble too much with bonds. And that's essentially because, generally speaking, equities will almost always offer a better return than bonds. Bonds at the moment, especially, they're offering maybe 3%. We might see that go up to 5% in the short term in the next couple of years, but that's still quite low. Any company that is earning 10% on their capital, which a lot of companies are earning 10% or more on their capital, will outperform those bonds over time. So generally, I just like to keep cash available so I can buy more equities. And I generally don't sort of put my cash in any bonds, really. I just go high interest savings account, and I just stay away from the bonds. That being said, I don't really have any experience learning about bonds. I've focused much more on equities, so I can't really give you too much of an opinion here. I can just tell you what I do, which is high interest savings account. But I mean, if bonds, ETFs is something that you find interesting, then you should research into it, and it might be suitable for your portfolio. None of this is financial advice. It's just entertainment and educational purposes. I don't know any of your guys' personal circumstances, so that means that I can't offer you specific financial advice. This is just my general opinion. And Joshua's third question here is, other than Stake for US stocks, which Australian broker would you recommend for Australian stocks? Now, I only use one other broker, and that is CommSec by Commonwealth Bank. That's my main broker where my main portfolio is. So I can recommend that. It's great. There's a lot of useful research information and tools on the platform that are free, and there's some paid ones, but I just focus on the free ones. It's a great platform. It's been good. Customer service has been good as well. So I can recommend that, but I can't really recommend any others. The brokerage is a little bit more than some other sites, but I generally don't worry about that too much just because of the investing style that I have. I'm not investing very often. I'm not trading or anything. I invest maybe a handful of times per year. And when I do invest, I invest in large amounts. So it generally doesn't make too much difference if I'm paying $10 brokerage or $15. The next question we've got here is from Nightsight, and they say, hi Hamish, what do you think about the Canadian stock market? Are there any stocks that you would invest in right now? Personally, I've never actually looked into the Canadian stock market. I know of a few of the marijuana businesses in Canada just because I've seen them on YouTube and people talk about them, but I wouldn't invest in that industry just because it's too new and it hasn't been around for long enough for us to see sustainable trends in the industry. But in general, I really haven't looked at the Canadian market, so I can't really help you there. There's also no particular reason that I haven't looked into the Canadian market. It's not like I have anything against it. It's just that there is plenty of stocks available for me to look at in the US and Australian markets. I don't really need to look anywhere else. When I study a business, I study it for at least a month before I make a decision, and that means that there's always going to be hundreds of stocks on the US and Australian markets that I haven't looked into, and I don't want to add to the pool of stocks that I could look at. I just want to focus on a couple of industries. I focus mainly on the US now, and I just try and break down all of the stocks that could possibly offer us a great opportunity. The next question we've got here is from Gareth, and he asks, you mentioned that you have a side business. What is it? And also, do you want a career in finance or stick to your business and your YouTube? So my side business at the moment is just simply my YouTube channel. So I give free educational information about stocks and about finance. And in exchange, I run ads and I do promotions and that sort of thing. And that's how I can generate money from this free content. And just to be clear, I do make a very, very small amount on here, certainly not anywhere near enough to quit my job. So I work a job and I also do this as well, and that takes up a lot of my time. In terms of a traditional finance job, I don't really see myself going into a traditional finance job. I just want to run a business, and I have big plans for this YouTube channel and for expanding my business in the field of investment in the future in order to provide you guys a ton of value, because that's ultimately what I want to do. I want to provide as much value as I can for the lowest cost to you guys. And through YouTube, that's great because it doesn't cost you anything. It costs you about, the 5 seconds you have to wait before you have to skip the ad at the start, or the 1 minute that you have to sit through a little bit of a promo from me at the start. And that's all you have to pay, and you get all the information. But it also takes a lot of my time. And in order for me to be able to do this full time, there has to be some transition into some paid product. And I can do both at the same time. But in order to answer your specific questions and in order to provide a ton of value to you guys and actually step-by-step guide you through the investment process so that you're doing everything you need to do in order to maximize your wealth over the long term, then there is going to be some kind of consulting product or service that I do want to make available to you guys in the near future. I see way too many finance YouTubers that are just selling products on their YouTube channel. They're selling a membership group or a course, and the course is just not providing value, or the membership group is just not providing any value to you. And in some cases, I think that it's such a bad decision that if these finance YouTubers were actually, if they were serious about the finance space and the investment space, they wouldn't recommend this product to their audience. They wouldn't be selling this product to their audience because they themselves wouldn't buy it. And that's the difference between me and I think a lot of the others out there. I think a lot of them out there are just sort of producing free content, and then they have this kind of average product that they're just pushing because they can. I don't want it to be like that. If I'm ever going to create a product or service, it's going to be an online consulting platform with tools and resources and constant support that is actually going to provide value, because we have to actually solve a problem for you. And I think that a lot of people are sort of pushing these products that don't solve a problem for anybody. And I want to solve your problems. If you're having trouble sticking to an investment strategy and maintaining it over time, that's the problem that I want to help you guys with. All right, so the next question we've got here is from Murray, and he asks, how do you raise capital to invest? In other words, how much of your income do you put towards investing? And that's the first question he's got. He's got a couple here. So the first question, essentially, I really don't spend that much. I try to live very conservatively. I don't go out or anything like that. I just save as much as possible. And as a result, I'm actually able to save about 50% of my income towards my investment, and often more than 50%. That's just the baseline. Often I can save a little bit more. So that's how I save. The second question you've got here is, one of your stocks has dropped 25% today. What do you do? So this is like a hypothetical. So essentially, if I already thought it was undervalued before it dropped, then the additional 25% is just making it more undervalued. If nothing has changed in the underlying business, meaning if nothing has affected how much cash it can produce for you over the next 10 years, then it's a no-brainer that you want to add more, because you're just getting an additional 25% discount. Now, definitely don't fall into the trap of thinking, oh, that stock fell 25%, so it's on 25%, it's 25% on sale. That is really flawed logic, and I'll tell you why. Because if you think that any stock that falls 25% is 25% on sale, that implies that at the original price before it fell, that it was at fair value. Because if it's at a 25% discount now, after it's dropped 25%, then it was at no discount, at a zero discount, when it was trading at its normal price. See, that means that you're saying that the market priced it correctly before, but now it isn't. So that doesn't really make any sense. Why would the market be right before and then now not right? So you really just want to judge this based on intrinsic value. Calculate the value of your business and see how much it's worth, and base whether or not it's a discount off that price. It might not even have to fall for it to be a discount, because it might already be undervalued, or maybe it has to fall a hell of a lot for it to be undervalued. So that's what I would do. It all depends on what value I've calculated for the specific business. And the last question he had here was, does your 2018 stock analysis spreadsheet work on Excel? Unfortunately not. It's just compatible with Google, and that's simply because they're not compatible with each other, which means I'd have to go in there and change a lot of things, and I just haven't been focusing my time there. So unfortunately, it's only available on Google. But since most of you guys are subscribers and you need a Google account to be subscribed to me on YouTube, I figure that that's not too much of a problem. And if you don't have a Google account, it's really not that hard to make. And I also have that video on my channel that explains how you can use the spreadsheet on Google if you're sort of new to that and you haven't used it before. So that's all the questions that we had for today. I hope you guys enjoyed this one. And remember, if you have a question for next month's video, please leave it down in the comment section below. I'll be sure to check them all out and add them into the next video, and if not that video, into the next video. So make sure you leave a comment down there. If you did enjoy the video, make sure you show your support by hitting that like button. It helps me out a ton. And if you're new around here, of course, hit subscribe and join the team. But I hope you guys have a great day, and I'll see you in the next one.